Welcome to the 7 Investing Podcast. My name, of course, is Daniel Kline. I'm being joined today by Giri Devanur, the CEO of reAlpha. That may not be a company you've ever heard of, but I'll give you their description. They're a real estate investing startup that is looking to democratize the $1.2 trillion short-term rental market and create accessible investing opportunities for Main Street. Giri, welcome to the 7 Investing Podcast.
Hi, Dan. Thank you very much for your intro.
Very excited to have you here because as fans of the show, people who watch us on 7 Investing now know it's been a very strange time for real estate. We've seen values where I live in West Palm Beach for single family homes roughly double. I saw my brother, who was living in Miami for much of the pandemic, have to move like every 2 weeks because he couldn't find a short-term rental. He was in and out of corporate housing and hotels. It has been a very strange time. We're going to get to the real estate market. But before we do that, I think it's really important to establish what reAlpha does and sort of what your logic was, in creating the company.
All right. So a quick intro about myself, so that gives you the context. I've been a tech guy. This is my 6th startup. I've been through multiple different kinds of tech. My previous company, I took it from 0 to $50 million revenue in under 4 years. We got listed on NASDAQ. After I rang the bell, I said, I'm going to do something else. Before that, I had done a 1,000+ people tech company between Bay Area and Bangalore in India. So tech has been my passion all my life. So after I rang the bell on NASDAQ, I thought I'm going to do something else, right? So I decided to move to Columbus, Ohio, from Princeton. I used to live in Princeton. Because of COVID, I said, I'm going to go elsewhere. I moved here, and then, when I was thinking about what to do next, one of my friends, she called me from Princeton. She was trying to buy an investment property like you. That was a $400,000 home. So, like banks were expecting her to put 25%, which is $100,000 down. She did not have the 100,000. So she called me saying, Giri, can you, either give me $100,000 or give me, find a solution. So I wore my tech hat and I said, I'm going to try and solve it through tech, right? That is the origin of reAlpha. reAlpha means reimagining alpha. Alpha is the yield, all your listeners know. How do you beat that, right? That's the thesis of reAlpha. So far, we have figured out 4 alphas. I will talk more about those as we move forward.
Sure, absolutely. So you're using what's called Reg A or Regulation A financing. It's a different way to purchase anything. Why don't you explain it a little bit? Because that's not one I was that familiar with. I think I've probably done shows on it before, but it was not one that popped up into the top of my head here.
So, like in 2015, Jobs Act was passed. And, when the Jobs Act was passed by the Congress, what the writers of that regulation did was to allow unaccredited investors to get into fast-growing companies. In the good old days, if you wanted to invest, let's say, in Airbnb itself, which you are a user as well as an investor, right? So, if you wanted to get in when they were an early stage company, you had no choice. Either you had to be a VC or had connections and stuff like that. What Regulation A has done is it has removed that barrier. You can enter into, early stage, highly promising companies at the ground floor level, not at the IPO, which is the 100th floor level.
So people who are investing, are they buying shares of individual properties? Are they buying shares of the company? Give me a little more detail here.
So through the Regulation A, you will be, buying into all the properties. So, you are buying in the equity of the company. But, if you are coming in at a property level, then, you'll be investing in only that property.
So you can sort of do either. Like you could invest in a property, you could invest in the company. And if you invest in the property, are multiple people investing in each property? And they have some ownership rights, right?
So, our core mission of reAlpha is to democratize Airbnb type, short-term rental investment. So in order to do that, what we are doing is we are allowing people to invest in all the properties where they don't have to take the risk of one property. It's like a portfolio theory, right? So you bring, at a portfolio level, or you come in at one property level, wherein, like you can own up to 12.25% for as low as $2,500. So we have brought it down to that level. But our mission is to eventually figure out how do we make our community members to come in at as low as zero investment kind of. That's our core mission. We haven't come there yet, but we are coming there soon.
I feel like you want to ask for a few dollars. That zero is probably a little too low, but I understand the concept.
What has surprised me is when I was digging into that data, more than 60% of Americans don't have $5,000 in their bank account to handle emergencies. How do we enable such kind of large population who have no access to buying properties, investing properties, etc.? How do you help them create assets? That's our mission.
So that's our mission as well. That is a very complementary. So what we're trying to do at Seven Investing is bring investing knowledge to people who might not think you could invest now because of no commission trading, because of fractional shares. You could put $5 a week in an investing account and get to see. I have my son who has his first job. He's 17 years old, put 30% of his paycheck into a stockpile account, which is a brokerage account. And he just started working. And when he gets home today or tomorrow, we're going to go through and pick, okay, I want to own a little piece of Amazon. I want to own a little, whatever it is, whatever companies, I'll steer him away from ones that are companies he likes that maybe aren't good investments, but we'll go through that process. And what's neat about it, and what we try to do at Seven Investing, is show you that if you can have that, so you're doing that on a real estate level. I know how difficult it is to buy real estate. I've been self-employed for a decade. That adds a certain added level of complexity. And to buy our property, we actually sold our principal residence, which didn't work for us during the pandemic, and bought a property for cash. So let's talk about the market right now. The reason I tell that story is you cannot buy a short-term rental property in the under $300,000 category in the Orlando area if you don't have cash. So that takes something that's already a small market and makes it a very small market. How do you identify value? And the property we purchased 3 months ago is worth $60,000 more based on what's being sold in a day now. So how, as a company, are you sort of using technology to figure out what to buy?
Yeah. So, again, I was not aware of the wholesale market, etc. Before I got into reAlpha, and then, we discovered our co-founder, Monaz. She has done hundreds of properties herself. So, she brings that in-depth knowledge of the industry. Our chairman, he has done thousands of properties, Brent Crawford. So between their teams, we have large institutional knowledge of how to buy those kind of properties. From a pure tech perspective, what we do, Dan, is we have built an AI platform. We call it as reAlpha Brain. So so what we do is we bring in hundreds of property data into Brain, and then pick and choose the right ones from an Airbnb viability perspective. So what happens is most of the people, even the ones who have the ability to buy such kind of properties, they will go and make very subjective decisions, right? So buy and sell, in our mind, if it is an investment property, you should not make it based on, oh, I like the neighborhood or I like the property, and then just buy it. We believe that it has to be systematic, technology-driven, unemotional decision, so that you don't burn your fingers, right? I have met, a bunch of my friends, oh, I like this neighborhood, and buy a property and then get stuck. And then, Airbnb viability will not be there. And hence they end up pumping in money monthly, month after month at times, right? So what we have done is there are 29 elements that our algorithm now looks at it. Like what is the neighborhood, school rating? What is the crime rate? How far is it from a Starbucks? And, you're drinking coffee, that reminded me. So, elements like that, all of them will be analyzed by our system, and then it generates what we call as reAlpha score. That is what is used to buy such kind of properties.
So I am drinking vodka, by the way. No, I am kidding. I am drinking water in my mug here. It is too late in the day for coffee, but I will say that the factors you just listed are all factors I personally used. How far is a Starbucks is absolutely one of the things. So I didn't use tech, but I made a spreadsheet of things I want, but it was emotional because we use our property. So yes, it is a rental. Ideally, I will make money on it over the course of the year, and I will because it's rented out for most of the winter to some snowbirds. But it had to work for me as well. So are you going to get a better deal because you can sort of divorce yourself from the things like we didn't like the couches, and that was like an absolute factor, and we've since replaced them. But you don't have to think about that, right? If you're pulling in the data and the rental track record.
See, like again, see, if you have to, go to 100 properties and visit and then make a decision, you will not be able to, decide on a property. Most people will reach the fatigue level after 10 or 15 properties. The ability to analyze hundreds of properties within a minute, within a few seconds, is which will, separate us from the crowd of buyers, right? There is, a large number of people. So what we have done is when we work with our community members to buy those kind of properties, once we buy it, we allow our community members to stay in those properties as well, because our financial model, we assume 65% occupancy rate and 35% we are giving it to our members to either they themselves can use it or give it to their friends and family so that people can go and stay there.
A similar model to what we use in terms of letting friends and family stay, though I have to say
we are doing it at a large scale.
Yeah, and so when you purchase a property, we both know prices have been escalating, especially now. This market in Florida is obviously not unique. We're seeing prices go up in many tourism areas. But when you're buying, does a higher price just change the payback terms and not necessarily impact whether or not you should buy it? Because for me, there's a hard dollar figure. That's all I have. For you, if you spend $280 versus $260, does that just extend your payback by 4 months or whatever the number is?
Yeah. See, like again, I have a very simple mantra that you use. I am always long on America. You should be always long on America, right? So American economy, it goes ups and downs. You and I are old enough to have seen, a couple of crashes in our career. What I believe is, yes, like it's little exuberated at this point in time, but is it going to crash like the 2008? I don't believe so, because the systems and the regulations that came in after the 2008 crash, they protect the banks, etc. I mean, getting a bank loan is almost as hard as pulling your teeth kind of situation, right? So what we believe is market is slightly overheated, not denying it, but if you take a long-term view, 10 years, 20 years kind of view, this will get adjusted over a longer period of time. But again, I'm very long on America in the long term. And I'm not going to get worried, what is going to happen to, X number of properties in the next 3 months, 6 months, maybe even a year. No, you should take a long-term investment approach.
No, I fully agree with you. We see people make that comparison. And in 2007, I did a no-doc stated income loan with a builder at a time that I owned another property, and I was intending to sell it, but it was not contingent. That was way more money than anyone should have been loaning me at that time. Whereas now, where I have a very stable track record as a homeowner, a nice bank account, a good income, I've lined up a mortgage to buy a house, but I had to do a bank statement. It is a broken system, but it is much more difficult. And we also have real population shift. And I think that's important to note. People buying houses they couldn't afford is very different than someone selling their very expensive New York home, at which point what you spend in Florida almost doesn't matter. We sold our principal condo to someone in New Jersey, and I'm not entirely sure if they paid $100,000 more, it would have been that big a difference when they were likely moving from something very expensive. That's me talking way too much, but I think it's important to point out to the viewer that much like we talk about how the tech crash of the 90s was advertising related, there wasn't any, and there wasn't cloud computing, that this is very, very different. But so how do you approach, is it geographic diversity? Because I know that my property was booked for all of July, and does not have a booking now until November. Now, likely it will book up for Thanksgiving and Christmas, and I have a very low cost, so it's not that important. But if you have like a market like Florida, which right now is stalled out a little bit for the reasons that are obvious, that we don't talk about that much, how do you deal with that? Like, how as a company do you sort of bake in that happening?
Yeah. So, like, again, when we, analyze a market, we look at both macro and micro level details. So, macro is how is the overall real estate behaving versus, short-term rental, what is the demand supply, etc. There are multiple elements that go into that kind of decision making. At a property level, it's very local, right? What is the short-term rental regulation in that market? It varies town to town at times, right? Again, in your state, Florida, Florida Supreme Court has to take a call because, some cities have gone fully in favor, some cities have gone against it, etc. These kind of, tussle will always happen. See, you and I have seen how Uber was eventually, in the, in 2011, 12, etc., most cities banned Uber because of the pressure from the taxi medallion lobby, right? In New York, they couldn't enter certain streets. Eventually, what happens is the consumer demand, which will, eventually make the politicians to come around and the regulations to get formed in the right way. For example, you are in Orlando area where Kissimmee is a big market, right? There are 44,000 short-term rental homes. So like that, every market will have its own, ups and downs.
Right. Whereas Celebration next door has exactly one building that has short-term rentals. And here in West Palm Beach, it's not that common. My previous building had a significant problem with illegal Airbnbs, but you could legally rent your unit up to 12 times a year. It just had to be for a month. So you could creatively get around some of the rules. But yeah, so as a company, are you lobbying? Are you working with Airbnb? Because it can be a challenge when you buy an Airbnb in a market where the rules change, right?
Yeah. See, what I believe will happen is nobody can retrospectively change the law. US laws are, fairly open. If somebody owns a property, technically they can do whatever they want. So Dallas did a very interesting twist to the story. They said, doesn't matter if you are using it for Airbnb or anything like that, pay a 7% tax, like a hotel kind of tax, right? I believe, more and more markets will eventually emerge into that mode, wherein just the way if you are running a Uber, you will end up paying some kind of tax. Same stuff will happen on Airbnb, and it'll be like any other commercial venture, right?
So once you buy the property, I assume there's some level of going in and painting and redoing. Are you then actually managing the property, or are you working with management companies?
Yeah. So right now we are working with a few management companies, but our core mission is to empower everybody, right? So what we are doing is we are creating a fund called Reimagine Fund, wherein we will be leveraging workforce opportunities, services, etc., to allow underserved communities in the markets that we serve, people who did not have a shot at entrepreneurship. We are going to give them the first contract and some capital to start their venture so that they can help us in the entire property management process. So I came to this country with $65. I believe, if somebody can get a small contract and a little bit of capital, they can build their own enterprise. So while we are scaling up, we want to help at least a few hundred, maybe a few thousand micro entrepreneurs to build their businesses.
That's really exciting. Actually, the maintenance company that's contracted to our property is that type of grounds up, sort of story. Just like someone with a hammer who started doing handiwork that now has a company with multiple employees. So committing to doing something like that, I think is really, really, really encouraging. Do you see yourself as a US-based company, or is this exportable to other markets eventually?
Yeah, right now we are a very US-centric company. Even though our technology, marketing, etc., we have experts from 14 different countries now. So, it's been an amazing growth story. What we believe is Airbnb is operational in 220 countries. So our market is as big as that. It's a $1.2 trillion market. So, we can go to any country that, we think is appropriate for our stakeholders.
So if I invest, how do I cash out? Let's say I put my money in and I'm 47 years old. So 25 years from now, I decide I want to, retire and cash in some of my investments. How do I do that in this sort of setup?
So, initially you will be investing in through the regulation Reg A shares. We are, launching it on our website very soon. We got the SEC clearance now. We are waiting for the last filing, etc. Once that is done, you will be legally, officially allowed to invest. So you can right now go to reAlpha.com and join our wait list, and then eventually when the SEC lifts the curtain, we will be allowed to take the investment. And at an appropriate time, very quickly, we believe that we will be getting onto some of the main stock exchanges. I have had the experience. Our management team had the experience of taking companies public. At that time, you will have the ability to trade as well. We are also considering the regulation A shares itself to be listed on secondary ATS. That's what is called as alternative trading systems. So, we are going to list on them as well.
So are you, at the point it goes public, going to move on to the next thing? I think it's important for people to know if, maybe we should keep you away from ringing the bell. Is this, are you here for a while? Are there people?
Yeah. See, I have taken a very long call on this. As I told you, I've taken a long call on America. So, this is going to be a much longer. See, last time, it was I wanted to ring the bell kind of bucket list item kind of stuff. But now, I believe that, we can truly create great opportunities. Our mission statement is we empower people to invest in real. See, in the last, 24 months, 36 months, you have been seeing the younger generation to invest in, just digital and, all the GameStop and variety of things. I've heard on your, video, etc., how, people, have made only one kind of investment. We believe that, we should empower people to invest in real. We call it as invest in real people, real assets, and real moments, right? So, we think that, if we can help at least another 1,000 micro entrepreneurs to emerge out of our ecosystem, that will be a great day for me. I think this is going to be my last innings before, maybe I'll work with you.
Well, do you think, and because I do think they're, as I said before, we have kind of the same mission, just we're approaching it from investing. And on one hand, that whole everyone can buy stocks because of Robinhood was good. On the other hand, you don't want people to think, hey, I buy a stock on Monday and I sell it on Wednesday and I made a bunch or I lost a bunch of money, because the one thing we preach is that as an individual investor, you have time on your side. If you buy good companies, and that's largely true with real estate. A lot of people, in the investing world will say, well, your home's not an investment. And to a point, it's not, because you live there. On the other hand, it's also something you pay down the balance of, that if you live in a market that's stable, even if it's not worth astronomically more, it's a piggy bank. It is an investment. How do you sort of change the national discussion on investment? There's no education in schools. There's no discussion. You don't even learn how to open a checking account, let alone how to open a brokerage account, or the benefits of buying real estate at a relatively young age. How do we change that conversation?
Yeah. See, again, what has happened is the younger generation, especially, and even actually, middle-aged guys don't even know the value of, compounding and, its growth, right? So we believe that, if we can correctly show them that, hey, invest in a property, but you can also go and stay in that property. That's why, we are taking only 65% to, be rented and 35%. So, people will have a pride that I own a vacation home, right? We want to bet on that and push that. And then, we want to, make sure that you earn the Airbnb revenue, get some, quarterly dividend, and then you can also go and stay in your own property, right? We believe that, if we can push that, not only equity ownership, you need to take long-term view on your assets that you're creating.
And will you have financial disclosures, similar to a publicly traded company?
Yes. So, like with the regulation A, it's almost like a public company, not as rigorous as a public company. I've been through, taking a company to NASDAQ, that journey, going through the S1 and, like quarterly reports, etc. Here, it will be half-yearly reports instead of quarterly reports.
Giri Devanur, thank you for doing this. This is a company we're going to follow because it's a market that's developing. I didn't even know short-term rentals was a thing until relatively, until moving to Florida, because it's not a thing where I grew up in New England, except for like ski homes and things like that. So this is a company we're going to keep an eye on. Thank you for doing this. Regulation A is something that also is going to be a big topic for us. I will thank your publicity person, Courtney, for setting this up, because she always knows the most interesting people I'm going to want to talk to. So that is the 7 Investing Podcast. We will see you in a couple of days. We do this every Tuesday and every Thursday. We are 7 Investing, empowering you to invest in your future.
Thank you very much.